$5 trillion disappeared in 1 year when the dot-com bubble exploded in 2000. Tech stocks crashed 80% overnight, and fortunes evaporated, while retirement accounts were destroyed. Then, history repeated in 2022 when the crypto bubble burst and erased $2 trillion. Bitcoin collapsed 70%, and the pattern played out identically. Now, we're 28 days into 2026, and the AI bubble is inflating fast. Tech stock valuations mirror the insanity we saw back in 2000. Nvidia is trading at price-to-earnings ratios we haven't seen since the dot-com peak collapsed. ChatGPT hype echoes the unrealistic promises that companies like Pets.com made before they went bankrupt. Every tech company announces AI integration daily, and market capitalization disconnects completely from underlying reality. Welcome to Financial Shadows, where we expose tech bubble patterns before they destroy your portfolio. The dot-com crash wiped out $5 trillion. The crypto winter erased $2 trillion. Now the AI bubble forms following the exact same pattern. 3 tech bubbles and 1 consistent mechanism of total devastation. Here's what Wall Street won't tell you about how these bubbles actually work. Tech bubbles follow identical psychology every single time throughout history. Revolutionary technology emerges, and media amplifies the hype exponentially. Retail investors pile in desperately, and fear of missing out dominates all rational thinking. Valuations reach absurd levels, disconnected from profits, and then reality crashes everything violently. Smart money exits early, but late investors lose everything they invested. The dot-com era promised internet would revolutionize business completely. Stock prices soared on pure promises rather than actual earnings or revenue. Webvan and Pets.com had billion-dollar valuations despite zero sustainable business models whatsoever. March 2000 arrived, and Nasdaq crashed 80%, while $5 trillion evaporated into thin air. Crypto repeated the pattern perfectly years later. Bitcoin would replace dollars, and blockchain would replace banks entirely, according to the hype. Market cap hit $3 trillion in 2021, but then FTX collapsed spectacularly. $2 trillion vanished during crypto winter, following the identical pattern. The AI bubble mirrors both predecessors almost perfectly right now. ChatGPT sparked complete market mania, and Nvidia increased 500% rapidly. Same hype cycle, and same speculation replacing analysis. The crash pattern is forming as we speak in early 2026. Your tech portfolio sits vulnerable right now to this bubble bursting violently. Which stock are you dumping first when reality hits? Comment below, because I'll tell you which crashes hardest. $5 trillion, then $2 trillion, vanished into thin air. How does this much wealth disappear so quickly from markets? Understanding tech bubble psychology explains everything, because the pattern repeats identically despite different technologies involved. Tech bubbles always start with genuinely legitimate innovation breakthroughs. Internet revolutionized global communication fundamentally. Blockchain enabled decentralized finance systems. Artificial intelligence automates incredibly complex tasks efficiently. These are real technologies with real potential and justified initial excitement. But then, speculation rapidly replaces rational analysis completely. Stock prices disconnect entirely from company earnings and fundamentals. Investors start buying based purely on future promises rather than current profits. Fear of missing out dominates every investment decision people make. Media amplifies hype exponentially, and everyone suddenly becomes a tech expert overnight. The mania phase accelerates at an exponential rate. Stock prices double every single month consistently. Every dinner conversation turns into investment advice sessions. Taxi drivers confidently recommend which stocks to buy. Companies simply add buzzwords to their names and watch stock prices surge instantly. Valuation metrics lose all meaning during these bubble phases. Price-to-earnings ratios become completely irrelevant to investors. Everyone claims old metrics don't apply to revolutionary technology anymore. New valuation methods get invented purely to justify insane price levels. Subscribe right now because this pattern destroys entire portfolios repeatedly. Don't be the last person recognizing what's happening here. Hit that like button hard. You're either early to this knowledge or you're going broke. Reality eventually crashes every single tech bubble without exception. Company earnings never match the inflated valuations. Promised profits never actually materialize at all. Business models prove fundamentally unsustainable under scrutiny. Stock prices start wobbling, and then cascading collapse begins violently. The aftermath devastates late investors completely and permanently. Life savings evaporate overnight. Jobs disappear across entire sectors. Companies declare bankruptcy by the hundreds. Winners recognize the pattern forming early and sold before the crash. Which AI stock collapses first in your opinion? Drop your prediction in comments below. Closest guess gets shouted out in the next video. March 2000 changed everything when Nasdaq peaked at 5,048 points. 1 year later, it dropped 78%, and $5 trillion evaporated completely. The dot-com bubble burst, destroyed entire fortunes overnight. Late 1990s saw internet revolutionizing business fundamentally, and every company needed web presence immediately. Stock prices exploded upward relentlessly. Pets.com sold pet food online and reached $300 million valuation despite zero profits whatsoever. Webvan delivered groceries and hit billion-dollar valuation, but went bankrupt within 2 years. Investor insanity reached peak absurdity during this period. Companies simply added .com to their names, and stock prices doubled overnight automatically. The Globe.com IPO surged 606% on first trading day, despite having no sustainable business model. Money poured in regardless of fundamentals. Valuation metrics became complete jokes during this era. Price-to-earnings ratios didn't matter anymore because companies had no earnings. Investors used website visitors instead of profits for valuations. More eyeballs meant higher stock prices, regardless of revenue. The mania fed itself relentlessly throughout 1999. CNBC became required viewing, and Jim Cramer screamed buy recommendations constantly. Day traders quit their jobs entirely. Everyone made money easily, and cocktail parties discussed tech stocks exclusively. March 10, 2000 marked the absolute peak. Nasdaq hit 5,048, and then cracks appeared immediately. Profit warnings increased, and dot-com companies burned cash rapidly. Funding dried up completely. Stock prices wobbled dangerously, and smart money started exiting positions. The crash cascaded violently downward from there. April 2000 saw Nasdaq drop 25%, and investors called it a correction. They kept buying more stock. Wrong decision entirely. By October 2002, Nasdaq hit 1,114, representing 78% decline from peak. Carnage spread everywhere across tech sector. Pets.com liquidated assets. Webvan declared bankruptcy. eToys collapsed completely. Silicon Valley emptied out as tech jobs disappeared. AI bubble 2026 mirrors .com perfectly right now. Same height patterns and same speculation dynamics. History repeating identically. You holding tech stocks bought at market peaks? Comment which ones below. Survivors sold early. November 2021 saw crypto market cap hit $3 trillion. Bitcoin peaked at 69,000 and Ethereum touched 4,800, while everyone became crypto experts overnight. Then, 70% crash destroyed $2 trillion in wealth. The crypto bubble started with legitimate blockchain innovation. Bitcoin offered alternative to dollar control, and smart contracts automated transactions efficiently. Revolutionary technology with real potential initially. But speculation overtook reality completely. Dogecoin started as internet joke, but hit 70 billion market cap. Shiba Inu meme coin reached 40 billion valuation despite zero utility. Pure speculation dominated markets. Cryptomania infected everyone globally. Celebrities promoted coins everywhere. Matt Damon sold Crypto.com during Super Bowl. Tom Brady pushed FTX hard. Your uncle discussed Bitcoin at family dinners. Leverage amplified the insanity dangerously. Traders used 100x leverage positions. Crypto lending platforms offered 20% yields. Celsius and Voyager promised risk-free returns impossibly. November 2021 marked the peak clearly. Then cracks appeared rapidly. Terra Luna, algorithmic stablecoin, collapsed, and 40 billion evaporated instantly. Celsius froze all withdrawals. Voyager declared bankruptcy. Three Arrows Capital got liquidated completely. FTX implosion shocked markets worldwide. Sam Bankman-Fried arrested for fraud. 32 billion customer funds stolen. Alameda Research gambled deposits recklessly. Crypto's Lehman moment arrived. Bitcoin dropped 70%. Ethereum fell 80%. Altcoins collapsed 95%. 2 trillion wealth erased. Crypto winter froze everything solid. Retail investors devastated completely. Borrowed money gone forever. Crypto crash proved pattern repeats reliably. AI bubble 2026 follows identical path. ChatGPT hype mirrors cryptomania. Nvidia valuations echo Bitcoin peak. Bitcoin or AI stocks crash harder. Comment A or B below. Wrong answer means zero portfolio. November 2022 changed everything when ChatGPT launched publicly. AI mania exploded overnight across markets. Tech stocks soared rapidly and Nvidia became trillion-dollar company. Same bubble pattern forming now. The AI revolution started with real breakthroughs. ChatGPT answered questions intelligently. Midjourney created stunning images. AI automated genuinely complex tasks. Legitimate technology breakthrough and justified excitement initially. Then, hype replaced reality completely. Every company announced AI integration instantly. Stock prices jumped without actual implementation. Just announce plans and market cap increases billions. Nvidia epitomizes AI bubble perfectly. Stock increased 500% rapidly. Price-to-earnings ratio hit .com levels. Chip demand real, but valuation insane. Microsoft, Google, Meta, racing AI development. Billions spent on products. Revenue unclear and profitability uncertain. Valuations assume AI dominates everything. Same assumption .com made. Same assumption crypto made. AI startups valued billions without revenue. No profits whatsoever. Just AI buzzword attached. Venture capital flooding in. Series A rounds hit 100 million. Seed rounds 20 million. 1999 repeating exactly. Warning signs flash everywhere. Retail investors piling in. AI ETFs launched recently. Trading volumes explode daily. Media pushes AI constantly. Fear missing out dominates. .com deja vu perfectly. Insiders quietly selling though. Nvidia executives dumping shares, Microsoft leadership reducing positions, smart money recognizing peak. Retail keeps buying tops. AI bubble differs one way. Happens faster than predecessors. .com took years. Crypto took months. AI taking weeks. Social media accelerates everything. Pattern compressed time frame. Crash mechanics identical though. Speculation peaks. Reality disappoints. Earnings miss expectations. Valuations adjust violently. Cascade begins. 70% decline follows. AI bubble bursts when exactly? 2026 likely. Spring probably. 6 months maximum. Your AI stocks crashing which month? March? June? September 2026? Drop prediction below. Most accurate gets pinned top. 3 tech bubbles share identical patterns. .com, crypto, AI. Different names but same destruction mechanism repeating. Stage 1 brings legitimate innovation. Internet, blockchain, artificial intelligence. Real technology breakthrough. Justified excitement initially. Early investors profit legitimately. Stage 2 sees media amplifying hype exponentially. CNBC pushed .com. Twitter pushed crypto. YouTube pushes AI now. Everyone becomes expert. Complexity simplified. Revolutionary claims everywhere. Stage 3 brings speculation, replacing analysis. Stock valuations disconnect from earnings completely. Price to earnings becomes irrelevant. New metrics invented justifying insanity. Eyeballs, network effects, potential, never profits. Stage 4 brings retail investors piling in. Fear missing out dominates. Taxi drivers give advice. Bartenders discuss stocks. Your uncle buys peaks. Late money floods in. Stage 5 brings leverage amplifying bubble. Margin debt explodes. Options trading surges. Borrowed money chases returns. Small corrections trigger liquidations. Stage 6 brings smart money exiting quietly. Insiders sell shares. Hedge funds reduce positions. Venture capital stops funding. Institutions distribute holdings. Retail keeps buying. Stage 7 brings reality crashing party. Earnings disappoint. Profits never materialize. Business models fail. First stock cracks. Then cascade begins. Panic selling, margin calls, 70% decline. The pattern never changes ever. Human psychology guarantees repetition. Greed, fear, speculation, destruction. Same cycle every decade. .com followed pattern exactly. Crypto followed pattern exactly. AI following pattern exactly. Different technology, identical psychology. Predictable outcome. Warning signs flash everywhere. 2026. Valuations at peaks. Retail buying tops. Insiders selling. Media pumping. Leverage extreme. Pattern screaming crash imminent. Tech bubble survivors recognize pattern early. Exit before peak. Preserve capital. Wait for bottom. Buy quality cheap. Repeat every cycle. Pick one. Which bubble hurt worse? .com? Crypto? AI next? Comment your answer. Pattern repeats regardless. 3 tech bubbles exposed completely. .com destroyed 5 trillion. Crypto erased 2 trillion. AI bubble next. Pattern clear. Crash coming. Are you ready? Understanding pattern provides advantage only if action follows immediately. Knowledge without execution equals zero value. Tech bubble survivors didn't just see crash coming. They positioned before impact. First move reduces tech exposure now. Nvidia at peaks? Sell portions. Microsoft overvalued? Trim position. Tesla speculation driven? Exit completely. Don't ride bubble down hoping. Second move preserves capital. Cash positions increase. Money market funds. Short-term treasuries. Boring investments. Survive crash first. Profit after. Third move identifies quality assets. Tech stocks crash 70%. Quality companies crash too, but they survive. Rebound strongest. Make list now. Wait for bottom. Fourth move sets price targets. Nvidia at what price? Microsoft at what valuation? Predetermined entry points. Emotions destroy decisions during crashes. Logic before panic. Wealth transfer happens predictably. Late investors lose everything. Early exiters preserve capital. Bottom buyers make fortunes. Same pattern every bubble. Only participants change. .com crash created Amazon opportunity. Bought at bottom. 1000% returns followed. Crypto crash created Bitcoin opportunity. 20,000 bottom. 300% gain. AI bubble crash creates next opportunity. Which companies survive? Which stocks rebound strongest? Position determines outcome completely. Tech bubble pattern never fails. Hype, speculation, crash, opportunity. Prepared investors profit. Unprepared investors destroyed. Financial shadows expose the pattern. 3 bubbles. 1 mechanism. 2026 crash approaching. .com repeated. Crypto repeated. AI repeating now. Investigation complete. Pattern clear. Warning delivered. Your portfolio fate decided by action today. Exit peaks or ride crash down. Choice yours alone. You dumping tech stocks now or later? Comment your move. Portfolio survives or dies based on decision today.